Here's a fake tweet from Donald Trump back in February 2015. If the Dow Jones ever fall more than 1,000 points in a single day, the sitting president should be loaded into a very big canyon and shot into the sun at tremendous speed. No excuses. If the tweet was real, Trump would be shot out of the canyon, retrieved back, and shot out again today. On Sunday, crude oil plunged 30%, the biggest one-day drop since the Gulf War 29 years ago. This has triggered a wave of sell-offs globally through the already jittery stock markets. Europe UKX was down 6%, Germany DAX was down 6%, Japan was down 5%, Hong Kong down 4%, Shanghai was down 3%. The S&P was down more than 7% and triggered a circuit breaker mechanism this morning. Another time this happened was during the 2008 financial crisis. So what is the circuit breaker mechanism? It was implemented to the New York Stock Exchange after the Black Monday crash on October 19, 1987. The Dow fell 508 points. Doesn't sound like much, right? But the index was only at 2,600, a whopping drop of 23% for the day. It plummeted from 2,620 down to 1,750 intraday. That's 33%. Wow. So the mechanism has 3 levels for halting market activities. Level 1 at 7%. When the index tanks 7%, the system stops for 15 minutes, then resumes trading. If it gets to level 2 at 13%, it will halt 15 minutes again. Then finally level 3 at 20%. And that's the max for the whole day. Welcome to Money Insiders. My one and only goal is to increase your financial literacy by 1% every video. If you're new to this channel, do consider subscribing and dropping a like to show some support. Think about the circuit breaker mechanism using the theater analogy. Say if you're watching the latest Pixar movie at the theaters with popcorn and all. Halfway through the movie, you get a notification on your phone that says there's a hurricane incoming within the next couple hours. Due to human nature, everyone just wants to leave the theater immediately. By the door stands a moderator that will block the exit whenever 7% of the people gets out. Then the moderator will ask you to rethink your decision for 15 minutes and let another 6% of the people out. WTF. How will you react? Panic? Jamming the doors, waiting to get out the very next opportunity? Taking down the moderator and making a run for it? Personally, I don't see a point for this mechanism. If there is a panic and I have an urge to sell, that 15 minutes isn't going to change my decision. Economist Adam Smith was the first to propose the idea of an invisible hand. The tendency of free markets to regulate themselves by the means of competition, supply and demand, and self-interest. In other words, let the market take care of itself. Does Monday's crash mark the bottom? Let's say I'm not comfortable buying yet. March 9th marks a 2,100 plus point drop, the most single day plunge ever. The only certain thing about this market right now is uncertainty. There are so many unknowns. As I mentioned in the last video, the corporate debt bubble and the greed bubble hasn't even been triggered yet. With the crash of crude oil and the market index, there are so many institutions who will get liquidated for the domino effect. As I browse around various videos on YouTube, a lot of Joe Blows are still pushing stock picks that are on sale for their blind followers to purchase. One of the gauges to determine if a stock is on sale is by comparing the current stock price to their all-time highs. Say for Tesla, now is 608, all-time high is 969. We divide the two numbers, 608 by 969 is 63%. 100 minus 63 is 37. So the stock is on a 37% sale. Oh my god, we need to get in on this deal. I do this all the time at the supermarket. When things get a discount, I buy. There are a couple things wrong with this way of thinking. Number 1. Anchoring effect. A lot of people may have the illusion that since the stock price once reached 969, it will eventually climb back to that level over time. Any dip is just a gully and a breather for the uptrend. This illusion was built upon a 12-year bull run which rocketed the index 440%. It's not normal. The all-time high is not the MSRP. Even if it was, the sticker price is always the sucker price. How can you possibly know with certainty that the stock will ever reach its record high price of $9.69 in your lifetime? A lot of things has to go right with all the hype and the market sentiments in order for the stock to shoot from $170 back in May 2019 to $9.69 in February 2020. Do you think Tilray will ever get back to his record high of $300? It's at $8 right now. Number 2. Supermarket comparison. Some would compare stock market sales to the supermarket deals. They'd say if Costco has the toilet paper for 30% off, people would load up the truck in a second. I should do the same with stocks. Okay, let's hold the horses there. The retail price of toilet paper hasn't gone from $10 to $44 a pack in the past 12 years like how the market has. A pack of toilet paper has always been $10 or less. They may have lowered the quality or the number of sheets, but a pack is a pack. In the meanwhile, a lot of stocks has gone up 12x in 12 years, as I outlined in the previous video. If a healthy crash comes, a 50% wipeout wouldn't be surprising. Another rule for investing that has been overused is buy on fear, sell on greed. There are two parts of this equation. It isn't as transparent as you think. Let's clarify this with Joe Blow. He thinks that since the market has dropped and shows signs of fear, as an expert investor, he's a genius to buy on fear, like he's done many times in videos last week. But in reality, he's buying on greed. Because why else would you try to catch a falling knife? He wants to be the hero, catch the bottom and make money. By doing so, he can show credibility and sell his BS products. $1,200 a year membership or $149 a month course? WTF. And if the stocks don't bounce, he'll just say I'm in for the long run, collecting free dividends. Great win-win situation to be in, right? You know there's a saying that when you're sitting at a poker table and you can't seem to spot the fish after 30 minutes, the biggest fish is probably looking at you in the mirror. So what do you think? Have I increased your financial literacy by 1%? If yes, then consider subscribing, hitting the bell, and dropping a like. Otherwise, you can comment and let me know how I can create more value for you. Take care and have a good one. Check out these video links if you want to learn more about various ways to invest through this crash.